Chelsea, welcome back. Today, we're going to talk about title insurance. You offer the same services as a title company, so we really want to get into this and understand what it is that your clients, people purchasing it, are actually paying for, and what it covers and what it doesn't cover. So this title insurance shows up on almost every closing statement, but most buyers, and myself included, don't really understand what they're paying for. How would you explain it to someone sitting at the closing table for the first time or the third time?
Yeah, so this question comes up a lot. Essentially, most simply put, title insurance is a policy of insurance. It protects the buyer and the lender, if there isn't a lender involved, from financial loss as a result of any unknown defects in the property's chain of title. So that could include unknown heirs from past transactions, unpaid debts, previous fraud or forgery that's not associated with our transaction, but may have been associated with a prior transaction. It also addresses simple matters like clerical errors in names or legal descriptions.
Okay. And what's the most common misconception you hear from clients about what title insurance actually does for them?
Most people don't know enough to have a misconception, but if there is a misconception, what I generally hear is, "Oh, that's just for the lender," or "That's just something my lender is requiring." They don't really understand what it is. And if they do try to understand, they're comparing it too closely to that owner's insurance, the auto insurance or the homeowner's insurance, and they are trying to understand what kind of future risk is protected when in reality, again, it's past risk.
Okay. So let's break down owner versus lender title insurance. What does each one actually cover, and who is each one protecting?
Sure. So the owner's title insurance is going to protect the buyer. So it's going to protect the person who at closing is gaining ownership of the property. And it is ensuring, again, that ownership interest that the contract is dictating that the buyer gets. So if we're talking about just a standard residential purchase and sale transaction, that ownership interest is going to be a fee simple interest to the buyer. For commercial transactions, we do often provide insurance for easements. So it's ensuring the easement rights and maybe an ingress and egress that the buyer is going to have as a result of this easement. Or if there is a lease and we're giving an insurance policy to a tenant, then the insurance is going to insure that leasehold interest. So it's giving insurance to say, buyer, you are coming into this property after this parcel has maybe been in existence for 50 to 100 years, and we have done a search back to the root of title, and we have looked at the chain of title, and we're giving you insurance up to the amount of your purchase price that says you are now the fee simple owner, or your lease is valid from the landlord. The landlord has the right to lease this property to you if it's a land lease or if it's a 10 or 15-year lease. So you don't have to worry about whether or not your investment is going to be invalidated.
Okay.
So that's generally an owner's policy. For a loan policy, the loan policy insures a lot, especially depending on the type of property and the endorsements that the lender is requiring. But most generally speaking, it is giving insurance to the lender and the amount of the loan to ensure that the lender is getting the priority that they expect. So again, if we're talking about just a standard residential purchase and sale transaction, say the purchase price is 400,000, the loan amount is 300,000, the lender is going to want a loan policy equal to $300,000 that's giving them insurance that they have first lien priority on that home.
Yeah. Yeah. And who typically pays for which policy in a Florida transaction? And is that something that can be negotiated between the buyer and the seller?
Everything is negotiable, right? So yes, absolutely. In Central Florida, it is standard in a residential transaction and even most commercial transactions, honestly, for the seller to be responsible for paying that premium on the owner's title policy. I get a lot of questions about this. People don't understand why. This is for the buyer. Why am I, as a seller, going to be paying for their policy? And the reason for that is, um, it goes to the risk, the seller's risk, because the seller is going to be contractually obligated to give the buyer a warranty deed. And that warranty deed does contain very specific warranties of title. So if the seller provides a warranty deed and an insurance policy, then the seller is offsetting that risk that the buyer is going to come back to the seller to say, hey, John Smith from 15 years ago says that he still has an ownership in this property due to some probate that was done incorrectly. Well, the seller's just going to say, well, hey, I gave you this title insurance policy. Please go make your claim to the underwriter instead of making it against me. And so it's a way for the seller to offset their risk in providing that warranty deed as well. So typically the seller does pay for the owner's title insurance policy, but the buyer is almost always, if not always, required to pay for the lender's title policy premium for the loan itself.
Can you explain what a promulgated rate is? Hopefully I pronounced that correctly.
Yeah.
And why title insurance cost does not really vary from one company to another?
Sure. Yes. So Florida law does set the dollar amount for the premium. The promulgated rate means that the premium is going to vary based on the purchase price. So Florida law does set forth a table essentially, and the rates are per $1,000 of the purchase price. So, for example, if the purchase price is between $100,000 and $1 million, then the premium on that policy is going to be $5.75 per $1,000. If it's over a million but under 5 million, then that per $1,000 it decreases to $5 per $1,000, and it continues to decrease as the purchase price goes up. So that's what it means to be promulgated. And yes, every title company, a law office issuing a policy of insurance does have to honor those rates, and that's in an agreement between our office and the underwriters themselves.
Okay. And we're going to get into title companies versus the services that you offer and things like that. But this question sort of hits at that. If the rate is the same everywhere, what should someone actually be evaluating when they're choosing who handles their title work?
An estimated settlement statement, absolutely. So, I mean, I tell clients this all day long. If before you agree to use a specific title company, whether you're paying for title or not, ask for a settlement statement before you sign the contract. The seller, so if you're a buyer, the seller has the property listed on the MLS. They almost will always have their preferred title company or escrow agent listed on the MLS so that when you submit your offer, you know who to put on that front page. We'll call them and say, hey, I'm thinking about putting in an offer. Please send me a settlement statement. Because even though the title insurance premium will be the same, that title company is going to have a different rate that they're going to charge for a simultaneous issue rate on your loan policy if you're getting a loan. They're going to have different settlement fees that they're going to charge for the settlement. And they may also have additional itemized fees on top of their settlement fee. I've seen settlement statements where the title company, advertised a $500 or $600 settlement fee. But then when you add up the FedEx fee and the notary fee and the IT fee, the storage fee, all of those fees, I've seen it where the settlement fee realistically was $1,500. Because of the itemized fees. So regardless of whether the premium for the title insurance itself is the same, I would always request an estimated settlement statement before agreeing to use any given company.